Welcome to Digital Asset News. Take a top stories in crypto and bring out a bite-sized pieces. Today, just as the thumbnail suggests, and I think everybody knows already, the market has taken quite a dip. And it's amazing what 24 hours can actually do. Because not too long ago, roughly 20 some hours ago, we were just talking about how there was nothing but great news. We had talked about how Walmart had getting out patents. Google was getting into the fray as far as crypto, Facebook and Instagram, and everything's going pretty good for crypto, except the other market called the traditional spot. So what we're going to do today is we're going to take a look at exactly why that happened. We'll take a look at the market, the section I called Why I Hated YouTubers, and an unpopular plan. We're also going to take a look at the traditional market and how those traditional players probably have some of the weakest hands I've ever seen in my life. Also, we'll take a look at some good news, and then also one thing more to consider. Plus, we're going to be doing the DCA show today, and last we'll finish up with the top 5 questions. So before we get started, let's take a look at what is going on into the market itself. So today it is 21st, roughly 10:05 a.m. here in Puerto Rico. Beautiful day. If you're suffering out there in the Midwest and different cold temperatures, I feel you. I lived there for almost my entire life and moved to Texas and worked out pretty well. But today's a pretty good day weather-wise, just not so much as far as the market. So here's what we have going on. We're using Trade the Chain for sentiment analysis, and usually we see some pretty good sentiment, but today, awful sentiment. People are very bearish. They're very worried, and I can see why. Total market cap is 1.8 trillion. We were just at 2.2 just a little bit ago, and all of a sudden now we're down 10%. Let's just see how bad the bleeding is, shall we? So we'll take a look at the coins themselves. Come in here, man, Bitcoin is down 10% in 24 hours. Ethereum, 12%. Binance, 10%. Anything major. Solana is down 14, almost 15%. Cardano, which they just released their DEX Sunday swap, that's down 13%. 12% for Luna. Who's the big loser today? Avalanche, 15%. 12% for 15% for Chainlink. No reason. Nothing got hacked. Nothing really changed. Just that's just how it is. And that's what we have as far as our market. So what happened? Well, yesterday, as you may have heard, the S&P 500 took a big old dump. And this is just the one day. And it started out okay. Everything's going pretty well. And then all of a sudden, earnings and different shatterings and talkings and speculation came about, and we just kind of dropped off. And usually in this situation, I say, well, when in doubt, zoom out. Let's zoom out. Let's see how bad it is. Well, here's a 5-day. All right. Here's the 1 month. And here's the 6 month. Still a little bit higher than where we were in September, 45.36. No, we're even lower than that. I guess better than August. And then, of course, in the year frame, we're still doing pretty good. But that's the S&P 500. And then the NASDAQ, of course, again, in the 1 day, dropped pretty heavy, precipitously. 5-day, 1 month, 6 months. That's pretty low. And then if you take a look at the year, not too great. You have to zoom all the way out to 5 years to take a look at it. So that's what's going on in the traditional space. And there's this part where I want to talk about, which is why I hated YouTubers in 2017, 2018. I hated YouTubers for a specific reason, and it comes down to this poll. We talked about this poll yesterday, where I said, when did you get into crypto? And I got to be honest with you guys. I was shocked that almost half of the people, and of course, it's just a small poll, under 2,000 people, almost half, 42%, 43 roughly, had just got in this year. So I can understand 20, and then of course, a quarter of you were in 2020, another quarter were in 2017 and 2019, which is kind of like I can feel the sentiment in the comment section, and then only like 5% have been in here since 2009 to 2016. So why did I hate the YouTubers back then? And some I still hate, actually. I don't hate anybody I dislike. But this is why. Because I didn't understand this basic principle, which was when I got in, which is right around here, November, I thought I was a genius at like 7,800, and I went all the way up here. And everybody was telling me I was going to the moon. I was going to go to the moon, which is the same thing that a lot of people have heard here in 2021. It's going to go up. And yes, even I thought that Bitcoin would go to 100,000, 130,000. Of course, I do say dollar cost average in and out, take some profits here and there. I don't subscribe to the diamond hand theory. I think that's goofy. But what I hated was no one was talking about dollar cost averaging in and out. They were just like, go all in, baby. And then before you know it, you go forward a little bit and I'm over here. And I'm looking at these YouTubers and I'm like, how the hell are these guys so calm at this point when Bitcoin was just at 19? And of course, the whole market it took a big crypto winter crash. And now it's at $6,500, $6,800. I'm like, how can they do that? And I used to despise listening to them because I'm like, this doesn't make any sense to me. And the reason is because those 5%, which were probably a lot more back then, they were getting it over here. 2016, $500, 400, 600, 700. So this $6,000 doesn't affect them at all. Didn't affect them at all. And now, as we move forward, let's go all the way forward. This over here, 43,000, it's like a pipe dream to me and to a lot of people who have been in the space for a long time. So I know this is going to be a little unpopular, but it's the truth, which is like, if you're looking at, people like me who have been in for a while, and I've said this a number of times, I'm like, look, it's not a get rich quick scheme. It's a dollar cost average. Only, get in, dollar cost average in, dollar cost average out, take profits. No one ever went broke taking profits like I talk about. And that's the truth. And now it just kind of comes full circle. So, which leads me to my next unpopular opinion, which I love just doing these unpopular opinions. I'd like to make sure my channel crashes to the ground. The unpopular opinion is this. What if today, especially for people who got in 2021, you are just like me. If you recently got in, but we're just 4 years apart. I got in 2017, crashed in 2018. You got in 2021, there's a big, not a crash, but a pullback or a bearish sentiment, whatever you want to call it. I think we're in a bearish market. And it's going down. Can it go down even further? Sure. Can it go up and make all-time highs? Sure. It's crypto. Who knows? But the unpopular opinion is this. If you're looking at this right now and you're thinking to yourself, I got to get out, I'm just going to take my massive losses, you can do that because this is on this channel. It's not investment opinion. It's just this is just investment opinion, not investment advice. You can do whatever you want to. But I'm telling you, if it was me, and just like when I started taking massive losses, I was not in a really great mood to start getting the business of losing money. So for me, the unpopular opinion is this. Let's do a 4-year thing. Just like how I did it. Dollar cost average all the way throughout. So all during those times when I was down here, and I was like, dang, how can these people be so upbeat or at least nonchalant about it? It's because they were doing the same thing back here. They were dollar cost averaging, or well, some were. And then what I did was just dollar cost average this whole way. And it was not the greatest because no one believed in me, except my wife. Gotta love her. But as time went on, it actually worked itself out. And now again, like I tell you, these numbers right here were pipe dreams to me back here. So unpopular opinion. Let me know what you think about it in the comments. Let's do a 4-year plan and move from there and see what happens. And then we'll see where we go. So let me know what you think about that in the comments. Let's move on to the news. And the news is, and I'm not going to say that every traditional investor has the weakest hands, but it seems like at any seismic activity, traditional equities are like, I'm out of here. I'm crazy. And I get it because, I mean, look, if you're like super rich, your big thing is like, well, I'm already rich. I'm just trying to protect my assets. I don't want to lose money. I've already got a lot of money. But I think for some investors, it seems like a lot of investors, like if there's any kind of like 1%, 2%, 3% drop, they're like, I'm out of here. This is crazy. And it is what it is. But this is what is going on as far as traditional markets. So we got hit with a whammy yesterday. U.S. weekly jobless claims at 3-month high amid Omicron wave. I'm not going to get into that, but I think that's kind of goofy. Existing home sales dropped 4.6% in December, the third straight weekly increase in jobless claims reported by the Labor Department on Thursday, also influenced by unfavorable factors such as Omicron. But the coronavirus cases driven by the Omicron variant are subsiding, and the seasonal factors The Omicron variant COVID-19 is hurting the U.S. labor market, but the good news is that this will be temporary, Ryan Sweet, senior economist at Moody's, says. And I'm like, is it really affecting job market that much? Or is it just people just are like, I don't want to go back to my same cruddy job that I had before, which I'm just not going to do that. I saw a good expose on 60 Minutes. They talked about how people aren't going back to their old jobs because they don't want to go back to those old jobs, and they want to do something for themselves, and they don't want to get crushed. So I'm like, I don't know if that's the truth, but jobless claims, I guess. And then, of course, there was that. Then traditional markets, you take a look at the FANG stocks, Facebook, Amazon, Apple, Netflix, and Google. Well, Netflix shares fell 20%, and not because like it got hacked or because somebody came out and said, hey, our whole system just went down. The reason why it fell is because they weren't growing fast enough. And that's what everybody is like, well, if it's not growing fast enough, my money's out of here. So the company said for the first quarter of 2022, it expects to add 2.5 million subscribers compared to 3.9 million it added in Q1 2021. And because of that statement, people are like, what? You're not going to add the same and even less, but you're still going to grow? I'm out of here. Again, they're just like, that doesn't make sense to me. Can you imagine? I mean, I don't do a lot of stocks. I just don't. I invest in Tesla. I think that's going to go pretty well. Amazon, because I have my Amazon business. I like that stuff. And Mara, the blockchain or the Bitcoin mining company. So when I see stuff like this, I'm like, really, you're going to get out just because of that? I guess I'd be buying. Honestly, I should buy Netflix right now. And then also rising mortgage rates squeeze both homeowners and buyers. And this is even crazier. Mortgage rates surge again this week on inflation concerns, hitting the highest point in 22 months. That sent home buyers scrambling to lock in rates. I can guarantee that because we are currently selling 2 houses that we have in Houston. Not our choice. It's because we have to, because the homeowners association are not allowing short-term rentals, whatever. So we'll just sell the houses when they're at the all-time highs. Sure. Many homeowners, on the other hand, face a shrinking opportunity to refinance. That's true. The rate and listen to this: the 30-year fixed mortgage, the most common home loan for buyers, increased from 3.56% from 3.45%. So they went from 3.45 to 3.56, and people are freaking out. It's the highest rate since the third week of March 2020. Okay, so it's been 2 years roughly, and so, well, year and some change. But that's what's causing people to freak out. The 15-year fixed rate mortgage, a popular refinance choice, increased from to 2.79 from 2.62. Let me just tell you real quick. When I got, well, this is actually my second house in El Paso. This was in 2005. The rates were 7.45%, and I thought I hit the lottery. That's no joke. 7.45%. I used to work with guys in the military who were back in the day of the Vietnam War era. And they would tell me, I remember Bill told me that he got an interest rate of around 15 or 16%, and he thought he hit the lottery. So when I look at these things, I'm like, why are people freaking out on these different numbers? It just doesn't compute with me. I think because I've kind of been there, but neither here nor there. And then to finish this up, mortgage rates moved up again as a 10-year U.S. Treasury yield rose and financial markets adjusted to anticipated changes in monetary policy that will combat inflation, i.e. the Fed is talking about raising rates. Go right ahead. Some people say they're going to do 3. Some people say it's going to be 4. JP Morgan, Jamie Dimon thinks it's going to be 8. I don't see them doing that much, but we'll see if they actually do that. And then this was from Freddie Mac's economist. So that's the bad news and what's going on. So here's a little good news. If we look at the traditional space, and why, before I go on, why am I talking about the traditional space? Because we're talking about crypto. It's because everything's connected now. There's so many different hedge funds and institutions here. We're all connected, and we can just kind of see there is somewhat of a correlation. I'm not going to say exactly how much, but you can kind of see things that as the S&P 500 goes down, or especially NASDAQ goes down, traditional market also goes down. And that's where we're at. So if we can kind of fix some things on the economy, which I don't think are that bad, I think we'll be okay. So here's some good news that we can all share. Thus, this was one article, and this was written last night, January 20th. JP Morgan says spending patterns show consumers are in good shape. And I don't want to read the whole thing because it's boring, but just top execs at JP Morgan have been optimistic about the nation's economic outlook this earnings season, pointing to healthy consumers who have cash in the bank. And before I go on, let me just say this. Non-investment advice, investment opinion, but if you have a bunch of cash in the bank, just remember that the inflation rate is 7. From what the Fed tells us, I believe it's much higher. I could be wrong. So if you just have money sitting in your bank account, it is on fire. And if you want to do that, go right ahead. I don't do that. I invest in hard assets, crypto, digital assets, a little bit of stocks, and then of course real estate. So sure, if that's what they want to do, I understand. And then also, so we've got a lot of people that are cash heavy. Where do they put it? Well, if we could educate them right, they would put it into assets. Then also, Apple stock gets a little boost as a target price ahead of the earnings. Remember, the FANG stocks are the biggest parts of the S&P 500, Facebook, Apple, Amazon, Netflix, and Google. And they talk about supply chain problems are improving. And then Wells Fargo raised its price target for Apple to 205 from 165. So when this comes out, this should actually help things because the earnings report, I believe, comes out today for Apple. Correct me in the comment section. And they state, we expect a focus on any commentary supportive of a belief that the supply chain is improving, continued confidence and strong end user demand across the portfolio. So again, if we can see a little bit of price movement of the S&P 500, because it just took a big dump yesterday, then maybe that could translate over into the crypto market. I don't see any issues with crypto. I see that we're doing good things. We're moving in the right direction. Like I said, we just had Walmart came out and said, hey, we want to get a patent on the metaverse and cryptocurrencies and wallets and ledgers and things like that. We also saw Facebook and Instagram come out and said, hey, we'd like to get in the NFT game and have people actually buy it and store it here. And then also we had Google talking about using Bitcoin for payments and payment processing. So I'm like, this is how things are going. This is good news. But then we just got this other stuff that just drags us down. We just can't have nice stuff, as they say. And then, so that's the good part. But there is one more thing to consider. And this is from friend of the show, James over at Invest Answers. And he's got a good point. And he says this. He says, look, just as everybody should be aware of, Bitcoin went up 4%, down 9%, all in 12 hours. Welcome to options expiration. Bears are in control. They need Bitcoin under $41,000 to pocket $132 million in gains. Let me say that again. The bears need the Bitcoin to be under 41K to make $132 million. So that's happening. This was actually 12 hours ago, and it's should happen right now. So let's see if it keeps dropping, and then we will go from there. And that is it, everybody. So that's what's going on. I know it's not maybe the news you want to hear, but it's the news that you need to hear because that's the reality of the situation. Now, again, do I think that this is all going to be bad, doom and gloom? No, because remember, I've been here for a while, and I can remember when it was just around here. And I remember getting in when people were in crypto in 2012, and they were saying the exact same thing. They're like, yeah, when it came over here, they're like, it's not a big deal because it just takes time, and you just kind of get into it. Time in the market is more important than timing the market. And that's why a lot of us are calm right now, even though it's a little bit crazy. So that's what we got. Let me know what you think about that. And let's take over some Q&A, and then we'll get out of here. I got things going heavy. Yeah, James is awesome. Why doesn't it come up? Okay. Yeah, James is awesome. FUD is not sustainable. That's right. Let me get this banner off here. Sorry. Okay. Oh, also, I will be putting in timestamps. I just haven't been doing that. But I'll do that this time. Comments. Okay. Why does it keep going? Thank you, Rob, for staying with thumbs down to keep it real. That's right. Who is George? That's George at Cryptos R Us. Everybody should know him. My IRA is in Gemini now because I moved out of iTrust from New York. Yeah, New York. Again, I still think that it's important that we get regulation, just like they did with the Law 230 back in 1996 for the internet. That was light-handed approach and allowed the internet to flourish. So I think they can do something like that would be okay. Unfortunately, you got Gary Gensler in the SEC, so good luck. Let's see. Thank you, Rob, for saying what's true. Keeping it real. That's true. Okay. Why are options trading legal? Either but for a price or don't. Yeah. Well, stick around because when we do the dollar cost or the DCA show, it's me, James from Invest Answers, and Ben from Into the Cryptoverse. It's going to be on James's channel. That's at 4 p.m. Atlantic time, 3 p.m. Eastern, and then high noon Pacific. So that'll be live today later on. This is a good one. George is the definition of hopium. Nothing useful that. Look, George, if you watched his video yesterday, George wasn't very hopeful. It was pretty eye-opening. I thought it was super entertaining. And one thing, George is really good for like getting people, because let's be honest, we can talk about bad news all day long. Trust me, I can pull it out. I try to be a little bit more balanced and kind of see where things are actually going. And yeah, we'll see. Oh man, I can remember when. Okay, boomer. Yes, that's right. I'm old. What are you going to do? Hey, I have a little bit of knowledge. Let's see. And that, I think, is it. Sorry, there's so many different things that come in because we have so many people. I got to put this on a slow burn. Here's a good question. Do you have a plan for assets if war will happen in Ukraine? First of all, we have to see that actually happens. We'll have to see what America's going to do as far as sanctions, but it could potentially. Just depends on how this administration actually plays it and what they're going to do. You're not as old as I am. I'm pretty old. Rob, are you completely in Puerto Rico now? Don't own a home in the U.S. No, this is our homestead here, but I can't say me and my wife, we own property in El Paso and Houston, short-term rentals. We had to sell a couple because of, like I said, the homeowner association aren't allowing short-term rentals, but we still have a few hanging around. So yeah, but those are just investments. And where was this? This was a good question. Hi, is probability of Bitcoin going 33K higher or climbing back to 45K? And if you had to put a gun to my head and say what's going to happen today, I'd probably say it's going to go a little bit lower. Something that a lot of people probably don't say because it's all, like everything's going to the moon. But yeah, it could probably go lower. That's just the truth. Now, will it? No idea. Nobody really knows. Ben's got a pretty good TA sense, but again, TA, it works until it doesn't. And then we'll go from there. All right, everybody. So that's it. So thanks so much for stopping by. I appreciate it. Hopefully this helps you out with a little bit of the jitters. Again, these days they're not the greatest days, but if we just zoom out, it's the same thing before. And I know it sucks because if you just got in 2021, like I got into it, it's not something you want to hear. But again, the unpopular opinion, I'm going to start right now. And I bet you anything in the next 3 to 4 years, we'll be at a much better, higher price place. It just takes time. No one said, actually, that's not true. This is not a get rich quick place. This does not exist. Get rich quick does not exist. The lottery exists, and we see what happens with lottery winners. So just hang in there. That's it. So thanks so much for watching. I appreciate it, and I'll see you on the next one. Bop, bop.